Dash leases a car. Penny buys the same car. They both think they made the smarter choice. They're both wrong because neither of them ran the actual numbers, and when you do, the gap is way bigger than either of them expected. Let's keep this fair. Dash and Penny both earn $55,000 a year. They both want the same car, a $30,000 sedan. Same model, same trim, same color. The only difference? What they sign. Dash signs a 36-month lease, $2,000 due at signing, $299 a month. Low monthly payment, brand new car, full warranty coverage. In 3 years, he just hands the keys back and walks away. Simple, clean, no strings attached. At least that's how it sounds. Penny takes out a 60-month auto loan at 6% interest. Her down payment is $3,000 and her monthly payment is $522. That's $223 more than Dash every single month. On day one, Dash's pockets are heavier, his payment is lighter, and he's driving off the lot feeling like he outsmarted the system. But here's what Dash doesn't realize yet. Every dollar Penny spends is buying her a piece of something. Every dollar Dash spends is renting a piece of something. And that distinction, over time, is worth tens of thousands of dollars. For 3 years, Dash is living the dream. Brand new car, that new car smell, full manufacturer warranty. Something breaks? Covered. His only costs are the lease payment, insurance, and gas. No surprises, no anxiety. Penny? Different story. She's paying $522 every month and watching her car lose value in real time. The moment she drove off the lot, her $30,000 car was worth $27,000. By year one, about $23,000. By year two, maybe $20,000. Meanwhile, her loan balance is still around $22,000. She owes more than her car is worth. That's called being underwater, and it feels terrible. Let's run the numbers through year 3. Dash has paid $2,000 down plus 36 months at $299. That's $12,764 total. Penny has paid $3,000 down plus 36 months at $522. That's $21,792 total. Dash has spent $9,000 less than Penny. On paper, Dash is winning by nearly 10 grand. But year 3 is where the story takes a turn. Dash's lease is up. He drives back to the dealership, hands the keys back, and does what 80% of leasers do. He leases again. New car, new contract, another $2,000 at signing, another $299 a month. He's back to month 1. The payment counter? That doesn't reset. Now look at Penny. She's 36 months into a 60-month loan. She still has 24 payments left. That's frustrating. But here's the difference. Penny has an end date. Every payment she makes brings her one step closer to owning her car outright. Every payment Dash makes brings him one step closer to giving the car back and starting over. One path is a conveyor belt. The other has a finish line. Month 60. Penny makes her final payment. Done. The car is hers. Title in hand. No more monthly payments. From this point forward, her only costs are insurance, gas, and maintenance. About $100 to $150 a month. Dash, still swiping his card for $299 every month. He doesn't think about it much because it's become part of his life. That's the danger of leasing. it normalizes a permanent car payment. It becomes background noise. But background noise still costs money. Let's check the final scoreboard. Dash has now completed 3 full leases. His total spend, including payments, signing fees, mileage overages, and wear and tear charges, lands somewhere around $50,000. And at the end of year 10, he has no car. Or rather, he has a car, but it's not his. It never was. Penny paid $34,320 on her loan. After that, she spent about $10,000 on maintenance over the next 5 years. Her total 10-year spend is roughly $45,000, and she still has a car sitting in her driveway. Older, sure, but worth about $5,000 and fully paid for. When you net it out, Penny spent less and has an asset. Dash spent more and has nothing. The difference over a decade is somewhere between $15,000 and $25,000. The real trap isn't leasing, and it isn't buying. The real trap is making a $30,000 decision based on a monthly payment, without ever asking what it actually costs you when it's all over, because that's the only number that matters.